Hi, this is Sean Hanlon, CEO and Co-Chief Investment Officer of Hanlon Investment Management, and this is our February investment research video. First, we'll start with an overview of market-moving developments during the month. The survey-driven readings of U.S. business conditions diverged for the latest readings in January, with the manufacturing sector, the red line, deteriorating by moving back towards the 50 level between expansion and contraction. The services sector, however, the larger portion of the U.S. economy, continued to firm higher, which is a good thing. The odds of the Federal Reserve's next move, which is scheduled for March, increased towards a potential cut in interest rates. This is highlighted by the sharp move higher at the end of the January period for the green line in the chart you're looking at, the probability of a rate cut in March rising to nearly 30% due to concerns around the coronavirus and its effect on global growth. The fear of the spreading coronavirus overshadowed the stellar earnings releases, where 2 out of 3 of the 45% or so of S&P 500 companies that have already reported have beat expectations, while only a quarter of companies have missed. The tech sector has led the earnings beats, while the laggards have been energy, utilities, and real estate. Now let's get into the relative performance discussion of the Hanlon proprietary models and their respective benchmarks. Our tactical investing style is available in our tactical models and also as a portion of our dynamic all-weather models. Our tactical large-cap U.S. equity strategy, executed within the Hanlon Tactical Dividend and Momentum Fund, outperformed the S&P 500 during the month, holding on to a modest gain during the month despite a late-month drop in the market. The primary reason for that outperformance is we have been not invested in energy at all, and energy continues to be a challenging area. Within the more aggressive tactical models, underperformance occurred due to investments in mid and small cap U.S. equities in green and blue respectively in this chart, leading to some underperformance versus their respective blended Hanlon benchmarks. The tactical Hanlon Managed Income Mutual Fund, in blue in this chart, performed well as it lowered exposure to high yield late in January and had some exposure to high quality long-term fixed income investments, which performed very well. Our strategic investing style is available in our strategic models and as a portion of our dynamic all-weather models. A strategic overweight to U.S. equities, shown here in blue, versus developed international in red, contributed positively to relative performance. However, it was not enough to offset underperformance from the strategic overweight to emerging markets during the month, shown here in green. The emerging markets had a rough month, mainly related to the coronavirus, but that seems to be easing as we get into the early days of February. The largest strategic core bond position in conservative allocations, the PIMCO Active Bond ETF in blue, narrowly outperformed versus the U.S. Aggregate Bond Index in black during the month. This is a good thing. That was a wise investment decision we made to use that PIMCO fund. The relatively smaller alternative allocations were mixed on the month, with small gains from REITs in red and multi-alternatives in purple, unable to offset the moves down from natural resources stocks in green and MLPs, basically energy-related investments, due to deflation concerns. Finally, I'd like to share the breakdown of the dynamic best of both worlds Hanlon all-weather models by risk level, ranging from the more aggressive growth and moderate growth allocations, having 20% dedicated to avoiding drawdowns with the tactical strategy, and 80% to buy and hold strategic approach. The more conservative income allocation of the all-weather has 33% dedicated to avoiding drawdowns with the tactical strategy and 67% dedicated to strategic. This concludes our performance discussion for the month of January. Thank you for watching and for the opportunity to be of service.